Have you ever been staring at a chart just completely mystified? You see a stock that seems to be glued to a certain price, like it's a magnet and it just won't move. And then, other times, a stock just absolutely explodes, right? It breaks out and just goes on this massive, unstoppable run. What in the world is going on there? Well, believe it or not, these moves, they're usually not random. Nope, there's an answer, and it's something called gamma exposure. Think of it like this invisible hand, pushing and pulling stock prices in ways that most traders just don't see. Okay, so to really wrap our heads around this market-moving force, we've got to meet the star of the show, and that is gamma. All right, so what is gamma? Technically, well, it's one of the options Greeks. Now, to get gamma, you first have to understand delta. Super quick, delta tells you how much an option's price changes when the stock moves by $1. Simple enough, right? Gamma, then, is the next level. It measures how fast that delta changes. Let me try to put that another way. This is probably the best way to think about it. Imagine delta is the speed of your option's price. Its velocity. Well, gamma is the accelerator pedal. It's what determines how quickly you ramp up that speed or how fast you slow down. So when you have really high gamma, that's like putting the pedal to the metal. You're really moving. Now, this is where it gets really interesting. Understanding gamma is absolutely critical because every single options position out there falls into one of two camps. And these two camps have completely opposite goals. You're either long gamma or you're short gamma. So check this out. This really lays out the fundamental battle that's happening in the options market every single day. On one side, you've got your long gamma folks. These are usually your option buyers. What do they want? They are praying for volatility. They need the market to make huge, crazy moves to make money. Then, on the other side, you've got the short gamma players. These are your option sellers, and they are betting on the exact opposite. They want stability. They want calm. They make their money when the market just sits there, and they despise big price swings. And here's why this matters to your bottom line. It's absolutely critical. Because if you don't know which side of this fight you're on, you're basically flying blind. Just picture it. You're short gamma, you're betting on a quiet day, but you don't even know it. Then, bam, some huge news event hits, the market goes wild, and that sudden move just completely crushes your position. This is hands down one of the most common ways traders lose their shirts. They're set up for a calm day and get wiped out by a hurricane they had no idea was even forming. Okay, so we've got this battle between individual traders. But how does that scale up? How does this ripple effect build into a force so powerful it can actually steer the entire market? Well, for just one trader, gamma is really just a personal risk metric, right? It's just a tool in your own toolbox for managing your portfolio. It's your own little accelerator pedal. But things get really different when we zoom out. When you get thousands, maybe even millions of options contracts all piling up around the exact same price, think of a big round number, like $100, or some major technical level that everyone is watching. That concentration, that's what creates what we call gamma exposure. Suddenly, all those little individual risk calculations, they morph into one giant collective force that can literally push and pull the entire market. It's not about one person's trade anymore. It's about the positioning of the market as a whole. And this brings us right back to the mystery we started with. Let's think about the big dogs for a second, the market makers, the ones who are on the other side of all these trades. To manage their own massive risk, they have to constantly hedge by buying and selling the actual stock. So when they find themselves collectively short gamma, their hedging creates that magnet effect. They are forced to sell into rallies and buy into dips, which literally pins the price to a certain level. But when they're long gamma, the opposite happens. Their hedging creates an explosion effect. Now they're buying into rallies and selling into drops, which is like pouring gasoline on the fire. It accelerates the trend and fuels those huge, explosive moves. Okay, so what does this all mean for you, the individual trader? How can you actually take this information and use it?
Good evening, everyone. Good evening, guys. A quick sound check. Am I audible? So, welcome to this Monday 5 p.m. session where we'll quickly go through what we have done on the weekly spot in last week and then what we did today and how we are placed for the settlement tomorrow, which is the most important event for this week in Nifty. So, let's get going with the weekly time frame first. And you can find these posts on the website under the forum section, vtrender.com. In the resources, you have the forum section wherein we have all these posts. So quickly coming to the Nifty spot chart, what we did last week in Nifty spot was form a huge 750 point range trend down profile, but it did not start as a trend day. What made it as a trend down profile? So that the first day of the week we opened higher. In fact, we gave a small follow through to this neutral extreme profile of last week, where we had taken support at this 2 week overlapping POC of 25880. So that was the reference, and we made a neutral extreme profile and we got a small follow through. But what we saw on Monday, 5th of Jan, was a seaside extension which failed and we got a failed auction. So failed auction is a very important concept in market profile, and it gives us very good swing references, and it has been continuously giving us these swing references. So in fact, to recall, we had uh, a failed auction right at the lows of COVID. So from there, we have come up a long way. So similarly, December 1st, when we hit the new all-time high in Nifty spot, that also was a failed auction. From there, we came down lower all month of December. And then again in January, the business start of the month was on 5th because all the big players came back into the market after the Christmas and New Year vacation. So on the first day of the uh, week, we got that failed auction confirmed. So this 26373 became the swing reference now. After which you can see how we continue to form lower value. And on Wednesday again we left another failed auction on the daily time frame, which was yet again a seaside which failed. So it was showing us continuous failure by the buyers. And what happened in the last 2 days was we got back-to-back trend day profiles to the downside. So that was the result. We got a 750 point move, which engulfed almost last 7 weeks of range in Nifty spot. And from that 26373 new all-time high, we went on to break below the previous month's value, which was 25781. And we had spoken about this when we did the yearly structure, and we had discussed how we had a nice balanced profile in December, and we had the chance of the 80% rule working out in that value. So 26085 was the value area high. Once that broke, we went on to complete the 80% rule, and this 25781 was the value area low. What we had done last week was left an important reference. The halfback of 9th Friday trend day was exactly there. So that was telling us that now it could show us change of polarity. What had to be support could now be resistance. So what what was the view going forward? It was an elongated 750 point range engulfing the 7 weeks range with a trend down structure, and we got these two daily failed auctions. So failed auctions are very important, I mentioned, and they tell us that one party is failing. And here we got two back to back. In 3 days, we got two failed auctions. So it was very clearly telling us that the buyers have failed twice in 3 days. And that is the reason we got such a big move lower down. And we seem to be taking support at this 25654, where we left a small tail on Friday, which was our support. But if this would have held, we were looking for a balance till the zone of 25880. If not, we were looking for a test of this swing reference of 25449, which was the weekly failed auction again from 11th of November. So 11th of November was an important day in Nifty spot. And that is the reason, if we go to what has happened today, we'll see how we have taken support right at the halfback of that day. This was the second last hypo for today on the downside. We made a low of I think 25473, and we had similar lows over there, poor lows over there. So that was showing us exhaustion. And from there, we came back higher, got back above this half back, and we have closed right at this level today. So this will be the point to watch out for, and we'll come to what the gamma exposure and the gamma density charts are showing us to mark out the range for tomorrow. So I'll just quickly open up the Nifty spot chart and we'll see what we have done today. So you can see we have held this failed auction, weekly failed auction from 10th to 14th of November. So we made similar lows at this 25473 mark, and we have gone on to make a neutral extreme profile. So you can see how the neutral extreme is now showing us that the seller has failed. And how can we tell that the buyer is in control? You can see this pullback low of K held the IBH. So when you're looking at range extension in market profile, if we make a range extension below the initial balance low, which is the first hour low, we expect the sellers to hold that. So once we made this extension in the E period, the seller should have held this. But in the F, we got back above the initial balance. That itself was a sign that the sellers were losing control. And then once we took out the initial balance high in the G period, you can see how the pullback in the K held right at the IBH. So this is a very important cue the market profile shows us structure wise. And this was the reason, because this held, we got this spike into the close. So spike is part of the neutral extreme structure, and we have formed a neutral extreme day today, which generally does not give a follow up. But we will have to see, because tomorrow is settlement, and we'll see how the inventory is placed and what is the gamma exposure showing us, so that we are ready for the levels for tomorrow. So the POC is at 25739 in spot, which will be the support, and this IBH where we got the pullback low is right at 25700. So that will be our support. So when we come to the gamma exposure, we will see what the different strikes are showing us and how they are matching with this reference which we are talking about. So coming back to the weekly report and having a quick look at the Bank Nifty spot before we move on to today's futures. So Bank Nifty was not as bearish as Nifty last week, and the reason being Bank Nifty did not form too elongated a weekly profile, but the start was similar and more prominent in Bank Nifty, because in Bank Nifty right on Monday 5th of January, when we made new all-time highs, we left an A period selling tail. A period is initiative. Initiative selling tail at new all-time highs is a special case, because it is clearly telling us when the market is getting into new territory, uncharted territory, the buyers are missing. So when you got this selling tail, you now knew that this upside is capped in Bank Nifty. So what did it do? It held this extension handle for a couple of days, the weekly extension handle, and it tried to form a balance, but it could not take this selling tail out. Even here on 6th, you can see how we got similar highs, which are showing exhaustion. In spite of some buyers coming in at open, they were not able to negate this selling, which came on the 5th of Jan. So from this 2-day balance, we again probe lower. Even here in the attempt to get above the previous day high, we left another initiative selling tail. So what zone of singles or tail you get in the initial balance is very important. That sets up the day. And if you are leaving it above the previous day high or at new all-time highs, you know that there is absolutely no demand there, and the PLR is to the downside. But in Bank Nifty, it was more smaller normal variation profile which we got. We did not get that big trend days which we saw in Nifty spot. Hence, the range was also smaller. And if you see the weekly profile, it was actually forming a nice balance, and it moved away only in the second half of Thursday, where it made this range extension and then it continued the down move on Friday. So value wise, it was more overlapping to higher value, but it moved away from this balanced profile and we closed around the lows. So it was a normal variation profile to the downside with higher value. So what we were looking for in Bank Nifty spot for this week was this 58935 had to show us support, and it did. Today the lows made was I think 58864, and it also held this December 30th December value area low. We did break below this VPOC, but as mentioned, this was showing us support, and uh, it came back above this level. So what ultimately happened, we got back above this extension handle of 59343 and even this 59446. But now this will be the important reference in Bank Nifty, 59564, which is the extension handle on the monthly time frame. So that is where we made similar lows today. We have 3 TPOs aligned at the highs just below this reference. So just like how 25781 would be the reference in Nifty spot, this 59564, which is also coinciding with our rollover point for the January series, would be the reference on the upside. So we've got a neutral extreme in Bank Nifty spot also. So we will have to see if we get a follow through to it. So that is about the weekly spot. And we also have the daily report, which is updated every day, and this daily report has got the open type, all the important nuances which you need as a market profiler, and you can see what the open type was, what was the volumes, and if you are new to the market profile and terms which we are using, we have this help links right at the start of the post. So you can go through this and you can get well versed with what we do and what we follow in this daily report. And we also have the daily zones, the weekly zones, and the monthly zones for futures also, wherein we make note of the important levels which we have to uh, refer to for the entire series, along with the business areas for the current day. So this is there for both Nifty futures and Bank Nifty futures, and it is based upon the order flow as well as market profile. So these are very important levels, and you can see how today we opened below this and we went on to tag all these business areas. We hit 25577, and this is where we got support. After which, once we got back higher, we took off this pullback high, and once we took out this VWAP from previous profile, we almost tagged this next business area. 25899 was the high today in Nifty futures. So you can see how these business areas are marked for the buyers and sellers to take it step by step, and that is what we monitor live when the data comes in, and use the order flow and the other tools which we have to decipher which direction we need to take the trade in. So let's now move on to the profile chart of Nifty futures and today's order flow. So what was the open type in Nifty futures today? What happened on Friday was that at the close, it was a trend day down, but we saw the POC shift lower. And then at the close, we got this IB signal in the M period. It was on good volumes and the COT was showing us green. Plus we saw some big green stacked. But this IB signal was not activated. It would have been activated only above this 25815, which was our first business area for today. So what did we see in the morning? We saw an open, lower open, but we saw a probe back to this important reference, which was the POC of previous day. And what did we see there? We saw that we were not able to get above the POC. So this was a clear open test drive to the downside. And if you look at the volumes of the first 15 minutes, they were double the average volumes. 8,000 contracts is the average volumes, whereas today we got 16,400 contracts. So this is the 30-minute chart. So even the 30 minutes showed us huge volumes, 24,000 contracts, which was clearly huge. And you can see how they were big reds also stacked. And these reds were mainly some of the longs who were forced to cover because of this lower probe. So what happened after that was, in the attempt to probe higher, we did swipe above VWAP. But what we saw was, again, reds were coming back aggressively. You can see how you have 3 rows of red here and again 2 rows of red here. When we tried to get back into this previous day's range, 25725. So that was held. So as long as that was held, we were expecting a range extension lower, which came about in the G period, in the F period. with this, sorry, in the E period, E was where we made the extension, where we got this IS 30, which was all in sync. We were looking for more downside. We got this IS 30. We were below previous day's range and we were below VWAP. Once we got this IS 30, we were waiting for activation of this IS 30 and we would have gone short below this 25573 with a stop loss at 25640, which was coinciding with the initial balance low. So it was all in sync with what we need to do. But what happened in F? We got a completely opposite uh, auction, wherein we never went back below this, but we negated this IS 30 because we got back into this initial balance high and we even closed above VWAP. So this itself set up the tone for what had to come, because it was very clearly telling these sellers have failed. They were not able to push below this. And now the buyers have taken it back above this and also above VWAP. So all the laggard sellers who were coming into the auction were slowly being forced to get out. And one by as the auction kept moving higher, even the higher sellers who had come in had to get out of the auction. So that is what happened when we got a big move higher in the second half, and you can see how we knew that the buyer was holding fort. I showed you how we supported the IBH in spot. The same thing happened here. The first big green bar was this G period where we closed above VWAP and we also closed above this IBH. So this green GTPO's VWAP was here, 25757, I think. Let me just, 25759 was that VWAP, and you can see how this VWAP was coinciding with this buying tail which we got on Friday. So the buyers had taken that and made that as a base, and this dip in the H took support right there. So this was telling us we were already above VWAP, but this was holding. This became our fresh support. And once we continued to make these marginal new highs, in the K period where we made the dip, we just held that initial balance high, which was at 25793. So 25793 was the initial balance high and we made a low of 25797. So that was telling us that the buyer is holding this. From VWAP, he shifted to this 25759, then he shifted to the IBH of 25793. So that is the reason we almost went on to tag that 25901 level which we had marked in the business areas. And that is the reason we have got a neutral extreme profile to the upside. But now what is it for tomorrow? So neutral extreme does not give a follow-up, but still it does tell us that one party has failed. So this VWAP will be the important reference in Nifty futures, which is around this 25750 zone and this GTPOs. Yeah. So that will be the all important support for the buyers to hold for tomorrow's settlement and also for the rest of the week. If we stay above this, we can expect the buyers to continue higher. Immediate reference would definitely be this pullback low which we have left in the K, but 25750 would be the main support. And we will have to see what we see in the order flow tomorrow if we test this level. On the upside, we have this extension handle of 25935, and I'll show you another interesting factor about how the multiple time frames in market profile will give you coinciding levels. So this 25935, which is the extension handle from Friday, is also the VWAP of the current weekly profile in Nifty futures. So Nifty futures has a cycle from Wednesday to Tuesday because the settlement is on Tuesday. So if we get to the Nifty futures weekly profile, which I'll do it right away. So this is the 3-day profile and this is today's. So I'm going to merge them to get the current week's profile. And you can see how the current week's profile VWAP is right at the 25936. And why is this important? Because the current week is been a trend down profile. So a trend down profile VWAP is where the sellers will hold. So what we have been doing from last week has been going down in one direction. It has been an imbalance, trending move lower. But today, for the first time in 6 to 7 sessions from the 5th of Jan, we have formed overlapping to higher value. Otherwise, the value was forming lower. So now we have some demand which has come back. So that demand reference would be today's VWAP, whereas the seller reference would be the weekly VWAP, and which is also the extension handle of Friday. So these are the battle lines are drawn. We will have to see if the buyer is able to take this out or if the seller is able to take this out. So in the futures, 25750 to 25935 is the immediate range which we have marked, and we will have to see how the volume shape up at the extremes of this range. So that is about the futures, and let's now move on to what is in store for tomorrow. Let's talk about the gamma exposure. We had discussed about this last week also, and we saw on last week how we were having a very narrow gamma exposure between two peaks, 26350 and 26300. And from that day onwards, the 26300, which was short gamma at that time, the put writers from 26300 continuously kept getting forced to get out. From 26300, the piece writers moved to 26200, then they were forced out of that. 26100, 26000, and on Friday we saw even the 25900 and 25800 being forced out. So today at the open, the gamma exposure was showing us that we are long gamma at 25800 and short gamma at 25700. So 25700 was supposed to be support at the open. But what happened at the open? I think our initial balance high itself was below the 25700 level, and we had an open rejection reverse kind of a start and spot wherein we opened and saw 25700 being held. So you can see how this immediately at 9:30 itself became long gamma, and the put writers had to shift to the lower strike of 25600. But then because we continued to fall, you can see how even the 25600 short gamma came into danger. And here at 11:15, which was where we got the E period extension down, you can see even the 25600 became long gamma. So what is this showing us? That the PE writers have been forced to cover, and it has been one-way traffic from last week from 26,300 till here 25,500, which was the last uh, short gamma which we saw, peak we saw. But then the G period, say even here in the F, you can see how we have two peaks with long gamma at 25,600 and short gamma at 25,500. But at the start of G period, you can see now the dual peaks were at 25,500 and 25,600. And then once we got just 15 minutes into G, you can see how the peak is now shifting. It was at 25,500 and 25,600, but now it shifted here. And as we closed the GTPO, this short gamma, long gamma difference was getting closer. And we got back into short gamma at 1 o'clock, and we remained short gamma at 25,700 after that. So what is the exposure showing us now for tomorrow? So here this 25,800 is short gamma. So this is 25,800 is short gamma. So this will be a level which we will have to watch in spot. This will have to be taken out by in spot and sustain for this call writer, that 25,800 to get under any pressure. Whereas 25,700 is short gamma, so 25,700 now is support. And I spoke about how 25,738 was the POC of today and 25,700 was the initial balance high. So as long as that is holding, you can expect this short gamma to hold. So we have a two peak structure for tomorrow. The short gamma is at 25,700 and long gamma is 25,800, and we have also marked out the range in both, so futures as well as spot. So we will have to see how it shapes up, and according to the uh, order flow signals in futures, if we are able to get above the 25935 and in spot we are sustaining about 25,800, there'll definitely be a run on this call writers, and this long gamma could get into short gamma mode, just like how the put writers were being forced to cover from last week. You could see these call writers at 25,800 and 25,900 to uh, run for cover. So we will have to see this gamma exposure tomorrow, and we'll have to see how the where the peaks are forming and where the strikes are short gamma and where the strike is long gamma. So coming to the gamma density and exposure combination. So this will be, as always we mentioned, this will be the most important chart for tomorrow, because it will show us live what the what change is happening in the inventory. So what is the convexity showing us? You can see how the convexity is right at the 25,800 level, and it is quite a narrow and a tall peak. So you can expect this 25,800 to be a important reference, but then the density is showing us a peak at 25,700. So that is adding to the view which we have in gamma exposure, where we have long gamma at 25,800 and short gamma at 25,700. So there is likely that we will get a move, and one of these option writers could get a scare tomorrow. So we will have to monitor this and see which of them it will be. If we continue on the upside, then 25,800 and 25,900 call writers would be the ones to watch out for some good Dukan trades. And on the downside, 25,700 and 25,600 would be the place for the put writers to watch out for if we move lower. So the range wise, we have the upper tail at 26,000 and the lower tail at 25,250, which I think will change post evening, because this is not updated as per the uh, close. So you will have to revisit this chart at the once the NSE updates the chart later in the evening, and this also will show you the exact current good 1 sigma and 1 sigma levels both on up and down, as well as the lower and the upper tail. So how do we know whether the short gamma or long gamma, which of the strike is holding short position? Because you will have to compare it with spot. Spot is at 25,800. So if you have uh, long gamma over here, it is definitely does mean that 25,800 call is being written and 25,800 put is being bought. So that is why it may be long gamma. It'll be a combination. It will never be 1:1. And here when you are seeing 25,700 is short gamma, it definitely tells there is more put shorts in 25,700, because the spot is well above it. So that is how you will need to decipher which strike could be in a problem. And apart from this, this is only giving you the strike with the short and long gamma picture. We have the all important spectrum and the volume X chart. So this will tell you what is happening. So if we have a quick look at what has happened today, you can see how at the open we had the call open interest rising. So calls were being written and the put was flat. And here you saw the put volume X above the call volume X. So it was very clear that the market is weak and it is falling, and we need to look for longs in puts. But where did it change? It changed this as soon as this GTPO started. You can see how the crossover happened, how we got the 45-degree rule, and after that the call kept diverging up and the put was flat. Same thing here. Here you can see in the open interest in the spectrum chart on the left how there was a massive drop in the call open interest. So this clearly tells it was the call writers who got hit after the G period started. And here the put started to build. So here there was some puts being written, and here the calls which were written in the morning had to cover, and they kept diverging into the close. So this is one more important chart which you will have to keep it open, and this in sync with the gamma exposure and the gamma density will give you very clear signals about which strike you need to trade and what is the direction. So if you are getting call volume X swiping, you will definitely look for longs in the call options, and vice versa if this is happening in the purple put. So that is how it is for tomorrow, and that is how we are placed for tomorrow's settlement. So 25800 spot is the upper reference. 25781 we already spoke about how it is the monthly value area low in December. So if that is holding, we are looking for a 80% rule in December's value on the upside. And then on the downside, 25738, which is today's POC in spot, and 25700 would be the support zone. In futures, 25935 would be that important reference on the upside, immediate reference. We have closed around 25880 in futures, I think. So that will be the upper reference. And as long as we are above the 25750, 25797 pullback low, we can expect the buyers to give some more upside in the settlement day. So that is it for today on the Nifty and the settlement part. Before I sign off, a quick look at what we have done in Bank Nifty. And you can see how in Bank Nifty also we made this similar lows at 59120. And in the business areas, we had this as the level which was marked. And this was the tail from 14th of November. So you can see how we do it, whatever we add up on this post are not such just random numbers. They are as per the process and they are all important references. So we held 59127, I think was the low today. And after this, we have come back above, taken off this extension handle. And we are looking for more upside. So where we have stalled in Bank Nifty futures is this 59,900 level and this POC, which is also very close to the series POC. 59954, I think was the series POC, will have to be taken out, and then we can look for more upside. So just like in Nifty, we have left a pullback low in the K, which will be important, 59568. So again, you can see how this 59568 is the reference we want to be taken out in spot, and this is showing support in futures. So we spoke about how that was the extension handle in spot on the monthly time frame. So this will be the support, and on the upside we will have to get about today's high and take off this VWAP from 8th of Jan. So we have the VLD VTrender live desk where we discuss all these nuances live and we see what setups we can take for trade, and that is there from 9:15 to 3:30. And we keep looking out for opportunities to trade as per the process we are following. So that is it for today from my side, guys. You can have a look at the VLD on the website, and if you have any queries, you can WhatsApp. The number is being given, and you can also mail us at support@vtrender.com. We'll be happy to answer your queries, and we'll be happy to also get your feedback about these sessions which we have bi-weekly. So thank you guys for joining in, and have a great evening, and wishing all of us a great settlement tomorrow. And let's keep rocking in the year 2026.